Hi, welcome to this week's edition of Winners and Losers in the Stock Market. My name is Emmanuel Ekpenyong. Again, very important to remind you of a disclaimer. That having been said, let's go to exciting stuff. So, the objective of this session is to review winners and losers in the stock market so we can learn about the pattern that they display, the trends that is obvious, so we can take advantage and participate in such winning trade in the coming weeks. The first winner last week was Bosch plus Lomb Corporation with ticker symbol BLCO. This company made a 22% gain, 22.9% to be precise, gain last week. That is almost 23% in 5 trading days, guys. Really impressive. But let's see what pattern is obvious in this chart. Right ahead, this is so sweet. If you look at the area around 14.69 area, that area served as resistance previously. So very important. And therefore, when the price moved beyond that 14 or $15 area with big volume, it was a time for anyone to have gotten in. And this break above this area continued to power higher the price until it closed at $17.60 last week. Really impressive. And what was a trigger in terms of fundamental side? A very good earnings report. So again, break above consolidation area with big volume power the stock higher, and it closed just above another resistance area in the past. So take note for this ticker BLCO. Let's see what it does next week. Okay, moving on to the next company that won big last week. It's LivaNova PLC with ticker symbol LIVN. This company won 14.5% last week. Very impressive. Again, similar pattern, guys. A break above consolidation area with big volume, with the trigger being a good earnings report. So why don't we keep on, keep searching or looking right now for stocks with that is lying that have a good consolidation, and then wait for a trigger that will power the stock above those area or below those area and act accordingly. Very simple, guys. I always say that the program is about winners and losers. We've looked at two winners. I think it's only fair to say that we should look at two losers. The first loser is a very popular company within the stock trading community. It's Rivian Automotive. Rivian Automotive with ticker symbol RIVN. A very popular company involved in EV electric vehicles production and sales. They lost big time, 38% last week. 38% loss in 5 weeks. That is impressive. Very impressive. But I like the beauty of the chart. You can suspect what I'm going to say next, guys. The area around $16-15 area serve as an important consolidation area, or what I call psychological zone for this stock. And when it break below that, the stock price got slapped down, closing the week at $10. And then you can see the trigger was a poor earnings report. Let's move to the second losing company last week. Palo Alto Network, again a very popular company within the stock trading community with ticker symbol PANW. It's a company involved in the semiconductor industry. So very, very interesting that this stock lost 23% when the sector has been, having explosive gains in the last few months. So, but what I care about as a technical trader primarily is area of interest. You can see when it broke below first 360 area, that was the first warning sign, and then it broke below a very glaring consolidation zone around 345.47. That would have been a time to go out or to short the stocks. We will talk about shorting the stocks in subsequent video, but it continued then to go slap all the way down to 261, but it then rebounded to close at 282. It rebounded at a very interesting point, another consolidation area around 261. So take note, that was where it rebounded back, and I think I see something happening here, but we'll cover that next week. So lessons learned. One, catalyst. Catalyst is what can drive a stock price up or down. And we said last week, and we are saying it again here, that earning is an important catalyst. Good earnings most of the time tend to push the price of stock higher, and the bad earnings tend to do the opposite. Not always the case, but good earning is a good sign to get into the stock. The second lesson is identify your resistance and support area, because what I describe as psychological point for a stock price. What do I mean by psychological point? Everyone is watching that point, and if it goes above, it tends to go higher. If it goes below, it tends to go lower. So good to know that. The third lesson is gap up and gap down. When the price gap up with big volume, the tendency for it to continue to go higher is there. Let's look at one example to illustrate that fact. Ticker symbol BLCO gap topped and then continue to power upwards. So if you did not enter on the first day, you could have entered the second or the second day, and you would have maybe made 10%, not 22%. So something to keep an eye on. When you see gap up, take position accordingly. The last thing I want to talk about as a lesson this week is that volume is a fuel. It's a fuel that is needed to power the stock upwards or downwards. I always talk about stock price needing to take off like a car, and that takeoff requires a big fuel, especially in that initial takeoff time. In terms of the stock market, volume is that fuel that is needed to power the stock up or down. So pay attention, guys, to volume. That is it for this week. I hope you can take advantage of these lessons and prepare to have a successful trading week next week. Until I come your way again, do have a beautiful time. Ciao, ciao.